Okay, let's see. Are we ready all to get started? Let's do it. Hey, how's it going, everyone? My name is Emil Hilson, and today I'll be discussing about Corsair Gaming, a company that I am currently invested in, and my reaction on their latest earnings report. Okay, their second quarter. So let's do that. So we'll do that right now, and also my reaction as well. Let's check it out. Oop, what the? There we go. So, for those of you that don't know, I am currently invested in that company, and I've started investing in it in about 4 or 5 months, maybe half a year ago, in a way. And I just like how the company is firstly very undervalued, as well as they're in a really big expanding area, and that's the gaming industry. So I feel this is a company that's going to be worth a lot more in the future than what it is currently, and this company is going to prove a lot of people wrong, especially Wall Street institutes. Okay, so here we go. Let's see. So my quarterly forecast for them is that this quarter I have them earning about $550 million. $200 million is going to be in the gamer streaming products, and $350 is going to be in the computer parts. And you have about net income about $44 million. Compared with the first quarter, the result is $529 million and $175 million in gamer streaming products, as well as $353.5 in computer parts. And they have about 46.7 net income. So yeah, why do I make that prediction? Is because I think there's still an upcoming trend in their products, and I think it's important that this trend continues, even though with this current supply microchip shortage. And I think they're able to have it better, make it better. So let's get started. Let's see what's up. Whoa. So in the beginning, wow, it dropped to 26 today. Ooh, that means something was terrible, something terribly gone wrong in a way. Analyst has them earning about $467 million on average. Lowest is 406, and highest is about 532 million. And the earnings per share, earnings estimate about 39 cents. Lowest is 31, and the highest is 47 cents. Hello, Lewis. Is that how you say your name? How are y'all doing? Thank you for joining in today. Are you currently an investor in Corsair? How did you find out about this video? Thank you for joining in. So let's do this. I'm getting excited. Here we go. All right. Yeah, it's a bit early, and I actually could have started this probably at 6 o'clock, but no, I live in a Pacific time zone, so yeah, that's not gonna work for me, because I'm not gonna wake up at 6 or even earlier just to read the earnings report in a way, okay? So don't get me doing that, okay? Okay, here we're gonna get started, alright? We're not gonna wait. Because usually there's a lot more viewers in the beginning of the live stream. In the beginning of the report, but I'm a few hours late, so whatever. Okay, I like to record my reaction and just have a discussion with people. That way I find it much more effective in a way. So let's go. Okay. Announce the results ending in June 30th. Okay, so the quarter is April, May, and June. Here we go. Net revenue was 472.9 million, an increase of 24.3% year over year. So the gaming and streaming products Revenue was about 155 million. Increase of 40.9% year over year. Gaming and components systems, so just the gaming parts, was 317 million. Okay, that's an increase of 17.6 million year over year. Okay, so first off, let's look at that. Compared to analysts, they beat analyst expectations. Just by a bit, right? Not too bad. So it's a good earnings beat. They didn't beat the high estimates, and my highest estimate is 550 million. So I might have overestimated them in a way. I have overestimated them. So I need to retweak the way I forecast them, because I guess I have way too high expectations for this quarter, especially the chip shortage that they have. Okay. So yeah, here we go. I like the music, and I hope it makes you feel calm as well. Nice. Next, we have gross profit, about 130 million, an increase of 24.1% year over year, with gross margin of 27.6%. Good, and that's a good gross profit of 24.1. That means, like, compared to last year, when it was an even better market, actually. Last year was a super hot market, and you're telling me this quarter is even better than last year? Gross margin of 27.6%. Okay, that's didn't change year over year. You have your gamer and your streaming content, gamer and streaming parts, 54.6 million, increase of about 41% year over year. Good. And gaming, and so the gaming computer parts gross profit was 75.7 million, increase, so a nice increase of 14.2%, pretty modest. Operating income was 34.7 million, and a decrease of 4.7%. Net income was, okay, so this is the big number I want to focus on. Net income is 27.7 million, or about 28 cents per share, compared to 22.6 million in the same period last year. So obviously I overestimated again. That's pretty optimistic with what I've given them. Did they meet the analyst expectations? No, they didn't. They actually didn't meet the analyst expectations. So that's actually a pretty big miss in a way. Yeah, because even the lowest estimate is about 31 cents. So that's probably what made the price drop a lot today. That's probably the sole reason. Their adjusted net income was 35.7 million. So I guess adjusted net income, it's kind of like different ways of calculating it. And then you got your net income of, no, that's done. Okay, as of the quarter, we had cash of about 138.6 million, 48.6 million capacity for our credit line, and a total debt of 270 million. Total long-term debt. Cash flow was about 31.6 million, which decreased from 73.6 million in the same period last year. So this is a little bit worrisome, because what is the main reason for having a lower cash flow? What did they do with it, and what exactly happened to it? Is it because of higher wages in a way? Just manufacturing increasing in price and all. So let's go. Let's listen to Andy Paul and what he has to say. I'm pleased with our performance in the second quarter, where we delivered year-over-year revenue of 24% growth. Yeah, it's a good growth. Our results highlight the strength of the underlying fundamentals of our business, as gamers continue to purchase and upgrade their gear, even as entertainment outside of the home and travel begin to open. And that's something that, analysts were really thinking about, right? Whether they want to continue playing games even though the economy opened up again. So yeah. Yeah, I had way too high expectations. I need to change the way But the thing is, I still had them doing about 2 million this year in revenue. 2 billion, sorry. Alright. Let's read the article later. We experienced growth in every category, despite key shortages such as graphic cards, logistics issues, so it's the shipping issues, as well as port delays as well. The midpoint of our full-year outlook calls for a run rate revenue of $2 billion compared to our pre-initial public offering revenue of $1.1 billion in 2019, which shows a strong improvement since then. That's a very nice improvement. But that's 2019 now, because last year I think they earned about close to 2 million. So this year you would at least expect probably 10% growth, 10 to 20%. We're investing in research and development, marketing, as we remain focused on expanding our resources. As an example, we're extremely excited by the recent launch of our first camera, which has received an overwhelmingly positive response from the community. And we've launched over 75 new products so far. And so if you heard about their Elgato product line, that's what it is. It's very popular for content creating, for streaming in a way, and video content creation. Very good for beginners and also very attractive for experts to use as well. Different level of people could use it. So we'll use our increased cash flow to repay another 25 million debt. Nice job. And we remain focused on further optimizing our capital structure and exploring options to reduce carrying cost of our debt. During the second quarter, we experienced higher than expected costs for logistics. So see, that's what's probably why you have that decrease in net income, right? And we expect these costs to remain elevated in third quarter. So expect that to happen in the third quarter as well. Shutdowns from the ongoing pandemic in several large regions we work in also negatively impacted our operations. We also continue to invest in future growth to maintain a high new product launch rate. So let's see. Full-year guidance remains unchanged. Net revenue, they expect it to be around 1.9 billion to 2.1 billion. I expect them to make about 2 billion. So right in the middle. Adjusting operating income to be in the range 235 to 255 million. Adjusted EBITDA to be in 245 to 265 million. Okay. So what are some recent developments? Last month, Corsair under the Elgato brand, they launched a face cam, a new premium webcam, and that's, yes, definitely, if you haven't seen a video on that, that's pretty nice on their quality of webcam, the usages. They also have a microphone interface and digital audio mixer. Pretty good for, the expert streamer in a way. And mic arm, I heard that mic arm is very, very portable and really likable for a lot of streamers. Okay, and then they launched the ATX towers. That's like their case, right, for the computers. So yeah, on this product launch, and then they held their earnings call. So that's really about it. Overall, let's check it out. Okay, so let's do this. Net revenue, yep, it's nice beat. So now you look at it in the first half of the year, right? They earn about $1 billion already. So you're gonna expect another billion, about $1 billion in the second half. That's what I feel. And yeah, they're doing much better compared to the first half of 2020 when they have that pandemic part. Cost of revenue. Oh wow. So about the same rate in a way. Gross profit. Operating expenses. Yeah, this is tough because look at that. They spent a lot more on on sales, general, and administrative expenses. 158,000. And that's probably because of all that inflation issue and all that chip shortage and everything, which everything increases. So businesses are trying to adapt to it. So total operating expenses. Net income. I like to always look at net income. Tells me how profitable business is after everything else. This number was a bit disappointing, honestly, but I know they had reasons for it, but still, I was expecting something higher. Yes, 30 cents. Net income per share, 30 cents. So that still missed analyst expectations. Joshua, hey, how you doing? Good morning. How's it going? So I know this is not a video. This is completely different from gaming. Actually, this is not really completely different from gaming because this is a gaming company in a way that sells, gaming products in a way. So, yeah, Corsair Gaming. If you haven't heard about them, they make a lot of PC parts, and streaming content parts as well, equipment. So you've probably seen keyboards, headsets, cameras, and mouse from them. But they also make a lot of very good computer parts, like your memory, your CPU cooler, your power supplies, and all. So yeah, this is a company that I feel is very underrated, and in the future, it's going to be much higher than its current price. Simply as that. Okay, very simple to explain. So you remember Elgato? I actually use Elgato. I use Elgato to do streaming. When I do Nintendo Switch, right? That footage? That's what I use. I use the Elgato recorder, the card recorder. And that's what's really good about this company. It's very useful. Okay. Next, what else is next? And here's a breakdown of it. Net revenue 155. Okay, so let me just quickly change up my estimates and see if I still have, So how much did we do in revenue? 472. And they had about, how much is in gamer streaming products? 155. Computer parts about 317. And the income is about 27 million. Maybe that's easier to see. Yeah. So I'm going to change up my forecasts in the next quarter as well. So looking at the gaming and creator parts, nice beat compared to year over year. Okay. So far in the first half of the year, it's been beating 2020 by a whole lot. But remember, Corsair had a really strong second half of last year. So let's see how they're able to keep up that pace. gaming components and systems. 317 million compared to 270. That's pretty good as well. Good. I was expecting a little bit higher revenue. Maybe too much, but 500 million? And then the gross profit didn't change at all. So it's about the same, their profit margin. I believe, yeah. Yep. Didn't really change. Yep. So nothing changed over that. Okay. And then there are current assets as well. Like to look at it as well. Total assets, the cash in a way. Liabilities. Didn't really change much, honestly, in a way. Now let's check out what they did with the cash. So they have about 27 million in cash. Last year they had about 22 million. They had a lot more cash in the first quarter. So the first quarter was a pretty monstrous quarter in a way. So what are they gonna do with it? Let's see. So net cash in operating activities, 31 million. So in investing, they didn't really do anything in investing, did they? Okay, they repaid 25 million. Yeah, that's right. They talked about how they repaid 25 million in debt. And then financing as well. So yeah, that's what they're gonna do with it. That's what they're gonna do. Pay a lot in debt. Pay a lot, repay the debt. Yeah. Net cash provided by operating activities. So they had 31 million in operating activities, and then they used 25 million to repay debt. Okay. They kind of used all of it, honestly, in a way. So in total, they already repaid 53 million in debt already, and I think that's a pretty big in itself. And then cash at the beginning of the period. So overall, I think it's a good quarter. It's not something like spectacular in a way. If I had to give it like a report card in a way, I would have to say probably a C plus or a B in a way. You know, I was expecting more revenue and also a higher net income, even despite the the logistics and everything and all that problem they have with shipping and all. But still, it wasn't like oh, it's disappointing. Maybe I had a much higher expectation. That's probably why. So yeah, let's see what others have to say about it. Ooh, and actually, I might buy some more actually today. I really might buy some more today. Look at that drop. What's the? So here's all the reaction. Okay. Sell off based on no fall, way overblown. As smart investors keep adding to position at this level, I expect continued move from the lows this morning. Yeah, probably gonna be even lower. If it goes into reaches in the $26 mark, buying more. I am buying more. Come on, come on, come on. If it reaches 26, you know I'm definitely buying. Oh, I woke up this morning at 6:30. Maybe I should. Maybe I should, huh? Yeah, maybe I really should. Ugh. I would love to buy more. Okay. Now let's see. I haven't listened to the earnings call yet, but that's something I would. Now let's check out what Motley Fool has to say about it. So it's not the right time to buy Corsair Gaming. Corona helped boost sales, but investors had to be confident the company could still thrive once the pandemic is over. And that's the first thing. If you don't have that confidence, you shouldn't be invested in this company. Because if you feel it's going to be downtrend, this company is not going to do well for you. Shelter-in-place orders drove increased demand for gaming accessories in 2020. The company is beginning to lap year-over-year comparisons. The underlying trend still looks promising. Look, as lockdowns have largely gone away, stock has fallen almost 40% year to date, and investors are highly asking themselves whether or not it's still a good time to own this. So let's take a look. Quick look. Oh, I like this. It's worth quickly reviewing what the company actually does and how the pandemic helped the business. So it's a global provider of premium accessories and equipment for esports market. For gaming, right? Yeah, their first quarter was amazing, I have to say. Very amazing. But if rapid acceleration in sales isn't evidence of the pandemic's impact on the business, the CFO was even more direct on the fourth quarter conference call, stating that the strong revenue growth year over year was driven in part by the COVID-19 shelter-in-place order. So like the lockdown. So he's saying like a lot of growth drivers is because of the coronavirus, but in order for this company to even have a brighter future, you can't just rely on lockdowns, right? We're gonna return to normal. How is your business gonna do afterwards? This is still temporarily. Andy Paul, the CEO, believes the increased spending on gaming parts is becoming more of a way of life and less of a, pull forward in revenue. Management's guidance for the rest of the year seems to support that as well. In the first quarter, the company upped its full year revenue projections to somewhere between 1.9 billion and 2.1 billion, a roughly 18% increase from its 2020 revenue. While that guidance should give investors some confidence, it's worth keeping in mind the company is starting to lap the strong performance spurred on by the pandemic from last year. Industry experts estimate consumer spending on gaming accessories actually declined year over year in June, which should temper investors' expectations. We should lower investor expectations for the coming quarter. Industry experts estimate consumer spending on gaming accessories actually declined year over year in June. Well, and that's why a lot of the big financial institutions and experts aren't invested in this company. It's because they feel this was just a temporary trend that helped the company, and you probably won't see more of that in the future. Ooh, I'm liking these prices. The big picture, although Corsair will likely experience a slowdown in growth in the next year, its long-term trends point to a brighter future. According to industry estimates, 2015 to 2020, total spending on video games grew steadily and included a 75% increase in gaming accessory spend. Much of that growth is expected to continue over the coming years. But it's not just the industry trends that should have investors excited. Thanks to this best-in-class engineering and product quality, Corsair is widely regarded as a premium brand in the accessories market. So that's one of the reasons why I can't really see it decrease in sales that much. Maybe a little bit, but like just temporarily. This customer affinity has enabled the company to charge more than its competitors in many of its product offerings, since customers know they'll be getting top quality tier equipment. Oh, this is where it comes in. Company's trading is valued at a trailing price to operating cash flow multiple of roughly 14, well below market average. For a company that has proven itself to be in a growing industry over the last decade, investors have plenty to be optimistic about in its valuation, even with the potential short-term financial results ahead. Overall, good article. It really introduced to Corsair Gaming and its risk and potential. So, what am I doing today? Probably holding. I actually might buy some. I actually might. If it goes to $26, I hope there's another sell-off in the next week or two. That would definitely get it to 26 or even potentially $25. Okay, and yeah, I'll love that. I would definitely love that. But I still think this at this price is still worth buying. I'm gonna make a limit order for $27 today. Let's do it. Let's do it. So yeah, that's really about it. I could have done this earlier, but like I didn't want to wake up that early, honestly, in a way. So thank you all for joining in. It's a pretty short video. In the end, I'm still holding on to Corsair shares, not selling any of it, and I'm gonna continue to buy more because I still believe in this company in the long term. So thank you very much, and I'll see you guys all later today for Skills earnings report. All right, see you all soon.